Good morning and welcome to the Killik & Co market update. This week, markets traded modestly weaker after comments from Federal Reserve Chair Jerome Powell on Tuesday. He pushed back on expectations for further interest rate cuts, saying that the path ahead isn't clear yet and it will depend on incoming data. Powell also noted that equity prices are currently looking quite elevated. Here you can see the S&P 500 over the past year. Given the strong rally that we've had since April lows, a slight pullback following Powell's remarks isn't too surprising. Even so, the index remains close to all-time highs after investors had driven equities higher in anticipation of rate cuts ahead of last week's policy meeting. Turning to gold, prices dipped slightly after 3 days of gains. This chart shows the price of gold per ounce over the past year. The pullback came as investors took profits near all-time highs, alongside a stronger dollar and Powell's mixed comments on the health of the US economy. Despite his cautious stance, markets are still pricing in further rate cuts this year, and gold remains near record levels. The big corporate news this week came from Nvidia. The company announced plans to invest up to $100 billion into OpenAI to build large-scale AI data centers. This chart shows Nvidia's share price over the last year. The deal would give OpenAI access to at least 10 gigawatts of capacity powered by millions of Nvidia GPUs and could generate hundreds of billions of dollars in revenue for Nvidia over time. Jensen Huang, founder and CEO of Nvidia, stated that this investment and infrastructure partnership marked the next leap forwards to power the next generation of intelligence. Following the news, shares closed up nearly 4%. This follows another announcement just last week. Nvidia will invest $5 billion into Intel to co-develop chips for PCs and data centers. Intel's stock surged 23% on the news, while Nvidia rose 3.5%. The partnership positions Nvidia to expand into the $50 billion consumer PC market, whilst also helping Intel push deeper into AI infrastructure. Global AI spending is forecast to reach almost $1.5 trillion in 2025 and could reach over $2 trillion by 2026. This further highlights the potential opportunities available to companies investing in this space over the next few years. In Europe, defence stocks rallied this week after comments Donald Trump made on social media regarding the Russia-Ukraine war. Trump wrote, "After getting to know and fully understand the Ukraine-Russia military and economic situation, and after seeing the economic trouble it's causing Russia, I think Ukraine, with the support of the European Union, is in a position to fight and win all of Ukraine back in its original form. With time, patience, and the financial support of Europe, and in particular NATO, the original border from where this war started is very much an option." This chart shows the impact of Trump's comments on the few European defence names which produced notable moves on the day. Hensoldt and Rent Group each rose about 8%, Saab gained 5.5%, and Rheinmetall was up 2% on the day. All of these stocks have also had strong performance across the year. Defence stocks more broadly have been strong performers this year, with rising geopolitical tensions driving promises of high defence spending. For example, the UK has pledged to raise spending to over 5% of GDP by 2035. The Stocks Europe Aerospace and Defence Index, which includes names such as Airbus, Rolls-Royce and BAE Systems, is now at an all-time high and up more than 65% year to date. Looking forward to the week ahead, we have results from Nike on Tuesday and Tesco on Thursday. That's all from us. Have a great weekend.